Hey everyone, today we're diving into some crucial insights from Robert Kiyosaki. You won't believe what's coming next. Kiyosaki, the author of Rich Dad, Poor Dad, is known for his bold predictions and contrarian views on finance. He's been warning about a massive market crash for a while now, and frankly things are starting to line up with his predictions. We're talking about a potential crash that could be even bigger than 2008, impacting real estate, the stock market, and even your retirement savings. So, what exactly is Kiyosaki saying? Well, he's been pretty vocal about his belief that the real estate market is headed for a downturn. According to Kiyosaki, the signs are all around us, from declining housing prices to an increase in properties listed for sale with price reductions. The indicators are hard to ignore. And this isn't just some random prediction, he's basing this on historical cycles and some pretty alarming trends we're seeing right now. If you look at the historical data, real estate markets have always gone through cycles of boom and bust. Kiyosaki believes we are at the precipice of another significant downturn. Remember, real estate doesn't always go up. There are periods where the market stagnates or even declines. The last major crash in 2008 left many properties abandoned and distressed, and Kiyosaki warns that we could be facing a similar situation soon. There are periods of boom and bust, and Kiyosaki argues that we're nearing the end of a boom cycle. The construction cranes dotting our skylines might be a sign of overbuilding, which often precedes a market correction. One of the biggest red flags he points to is the state of commercial real estate, particularly office buildings. The pandemic has accelerated the shift to remote work, leaving many office spaces vacant. With the rise of remote work, many companies are downsizing their office spaces, leading to sky-high vacancy rates. This trend is not just a temporary blip, it could signify a long-term change in how businesses operate. Kiyosaki predicts that we'll see a wave of these office buildings being converted into homeless shelters, which is a pretty stark illustration of how bad he thinks things could get. This repurposing of commercial real estate is a drastic measure, but it might become necessary if vacancy rates continue to climb. The real estate market is in a state of flux, and Kiyosaki's warnings serve as a sobering reminder of the potential challenges ahead. Now, let's talk about inflation. It's a term we hear often, but what does it really mean for our daily lives and the broader economy? We all know prices have been going up on everything from groceries to gas, and it's not just a minor inconvenience. These rising costs affect our budgets, our savings, and our overall financial well-being. Robert Kiyosaki, a well-known financial educator, believes this is no accident. He suggests that the current inflationary trends are a result of deliberate actions and policies. He argues that government policies like shutting down oil production, remember the XL pipeline, have directly contributed to this inflationary environment. By reducing the supply of essential resources like oil, prices naturally go up. And guess what? It's the rich who actually benefit from inflation. While the average person struggles with higher costs, those with significant assets see their wealth grow. How? Well, they own assets like real estate and stocks, which tend to rise in value during inflationary periods. This means their investments are worth more, even as the purchasing power of money decreases. But for the middle class and the poor, inflation is a nightmare. The cost of living increases, but their incomes do not keep pace. This creates a squeeze on their finances, making it harder to make ends meet. Their wages stagnate, their savings lose value, and they're stuck struggling to afford basic necessities. The gap between the rich and the poor widens, leading to greater economic inequality. And the government's solution? Raising interest rates. The idea is to cool down the economy by making borrowing more expensive, thereby reducing spending and slowing inflation. Kiyosaki warns that this could actually backfire and trigger a full-blown financial crisis. Higher interest rates can lead to reduced investment and consumer spending, which are critical for economic growth. Higher interest rates make borrowing more expensive, which can slow down the economy and even push it into a recession. This could result in job losses, business closures, and a significant downturn in economic activity, affecting everyone. Here's another thing that keeps Kiyosaki up at night: the US dollar. See, it hasn't been backed by gold since 1971. It's now a credit-based system, meaning it's essentially backed by debt. And the US economy? It runs on credit. We're talking about consumer debt, corporate debt, government debt, it's everywhere. Kiyosaki argues that this reliance on credit is unsustainable. If credit dries up, if people and businesses stop borrowing and spending, the entire system could come crashing down. Think about it. What happens when everyone wants to cash out at the same time but there's not enough real value to back it up? That's a recipe for a depression. Chapter 4. The danger of quantitative tightening. Remember all that money the Federal Reserve was printing during the pandemic? We're talking about $120 billion every single month. Well, those days are over. The Fed is now hitting the brakes, hard. They've stopped printing money and are even starting to remove it from circulation. This is called quantitative tightening, and it's designed to combat inflation. But here's the catch. When you remove money from the system, asset prices tend to fall. That means your stocks, your real estate, everything could lose value. Kiyosaki believes this quantitative tightening could be the catalyst for a massive market crash, potentially even worse than what we saw in 2008. Chapter 5. 401ks and retirement risks. Now, let's talk about your retirement savings, specifically 401ks. Most people rely on 401ks to fund their retirement, but Kiyosaki has been warning against them for years. Why? Because they're largely invested in the stock market. And as we just discussed, the stock market is looking pretty shaky right now. If Kiyosaki's predictions come true, and we see a major market crash, those 401k balances could get wiped out. Imagine working your entire life, diligently contributing to your retirement account, only to see it evaporate overnight. That's the risk Kiyosaki is urging people to consider. Chapter 6. The importance of debt and smart investments. So, what's the solution? How do we navigate this potential financial storm? The financial world can often seem like a stormy sea, full of unpredictable waves and hidden dangers. But with the right knowledge and strategies, you can sail through it successfully. Robert Kiyosaki, a renowned financial educator, emphasizes two key things: understanding debt and making smart investments. These are the pillars of building and maintaining wealth. Here's the thing about debt. It's not inherently bad. In fact, when used wisely, debt can be a powerful tool for financial growth. The rich use debt all the time to leverage their investments and grow their wealth. They understand how to use other people's money to create more money. It's the poor and the middle class who are often trapped in bad debt, like high-interest credit cards and predatory loans. This kind of debt can be crippling and prevent people from achieving financial freedom. When it comes to investments, Kiyosaki stresses the importance of financial education. Without a solid understanding of how money works, it's easy to make poor investment choices. Don't just blindly follow the crowd or put all your money into a 401k because that's what everyone else is doing. It's crucial to understand the risks and rewards of each investment. Learn how to analyze investments, understand market cycles, and most importantly, buy when everyone else is selling. This contrarian approach can lead to significant gains. That's when the real opportunities emerge. By being educated and strategic, you can turn potential financial storms into opportunities for growth and success. Chapter 7. The coming opportunity. Look, I know this might sound scary, but Kiyosaki isn't trying to scare anyone. He's trying to prepare us. He believes that while many people will suffer during the coming crash, those who are prepared will find incredible opportunities. Think about it. During a market crash, asset prices plummet. That means you can buy stocks, real estate, and other assets at a fraction of their previous value. But you have to be ready. You need to have cash on hand, you need to have a plan, and you need to be able to control your emotions when everyone else is panicking. This is how the wealthy build their fortunes. They buy when there's blood in the streets. So what do you think? Are we headed for a crash? And if so, are you prepared? Remember, knowledge is power. Stay informed and make smart financial decisions. Thanks for watching, and don't forget to like and subscribe for more insights.